over the next 10 years, do you think that all of these forced network effects and incentivized growth and generalized mining and all these different things that all these foundations and venture capital firms are doing to pile money in and build network effects and simulate growth on cryptocurrencies, do you think that's going to end up being a strong enough foundation for it to weather a global macro crash over the next 10 years if one happens? Or do you think that the market will become rational and then this stuff is going to bleed to Bitcoin like Bitcoiners think?
Well, again, this idea of the market becoming or being rational when there's a global coordinated attack on currency, effectively. I again really encourage the audience. There's a short book. It's called Fiat Currency Inflation in France, and it's talking about the assignat issue. I definitely mispronounced that. It's a French word. I think it's assignat, where they had a major currency debacle, let's say, and all of the things that happened culturally in France at that time. One of the main things was that people just started becoming much more prone to gambling, right? The markets got increasingly irrational as inflation progressed. So we're just getting started with this post-COVID global monetary expansion.
Oh no, we're just getting started.
Yeah.
I don't know if I can handle that, man.
So the next 10 to 15 years, I think it's just going to be absolutely devastating on the currency, on those that don't understand what's happening, like those that really, again, the economically vulnerable, people living on fixed income, the poor, working class, people depending on currencies to hold their value are going to be most victimized in this era. And you're already seeing it, right? We're already seeing these crises breaking out. We've got Lebanon having a lot of issues currently, and it's just going to spread. I think that, so the network effects of alts, they're real in the sense that if we define a network effect as a non-linear benefit of a new network participant joining to all the existing participants. So for Ethereum, every developer they get, it's actually increasing the value of the total developer network. So network effects are real, and I would say maybe that's what upholds a lot of the value of alts today, but they're not. The network effects of money are much different in the sense that money is the ultimate open source network, right? Like if we use gold as the analogy, gold is valued the world over, right? And it's valued because everyone values it. And essentially what it represents is this monetary shelling point on those properties of money. So people that are seeking a way to store their wealth in something that's divisible, durable, recognizable, portable, scarce, the market has zeroed in on gold to best satisfy those functions. Bitcoin being disruptive to gold, it's establishing a set of network effects that, they're multi-sided. I've talked about this a little bit too, so if you consider a standard one-sided network effect, it could be something like the telephone or Facebook, where you just have one cohort of users, which are the people that own a telephone or the people that have a Facebook profile. There's also two-sided network effects. If you look at something like a two-sided market like eBay or Craigslist, where you have buyers and sellers adding incremental value to the network. And two-sided networks are more difficult to disrupt because an upstart network has to introduce a superior value prop for both buyers and sellers simultaneously to disrupt that network, versus Facebook disrupting MySpace only had to break a one-sided network effect, right? Bitcoin as money, digital money specifically, is really unique because it has a four-sided network effect. So we've got buyers, we've got sellers, we've got developers, and we have miners. And so to try and disrupt Bitcoin, you would have to somehow simultaneously introduce a value proposition for all four cohorts And you would also have to do it in a way that was not a hard fork of Bitcoin, that was not trying to take advantage of its network effects. Because if you went that route, as Bitcoin Cash did in 17, you basically are forking the social contract. So as a Bitcoin holder, your optimal strategy is to just hold, right? You just hold both tokens and see which one succeeds. Now, clearly, I'm not saying people do that. A lot of people dump their Bitcoin Cash, but the point is that gives the network effects associated with Bitcoin a very inviolable network effect, if you will. It's very hard to break. So I don't think Bitcoin's going to benefit wildly from this inflation. I think it's the ultimate, I hate to call it a hedge against inflation because I think it's so much more than that, but it definitely is that. But these other, these altcoins, again, if they're nothing more, let's just assume hypothetically that none of them ever realize any substantial use case, or find any real world utility. They could still have a lot of quote unquote value just as gambling devices, right? People pushing these narratives around, investing in them, based on pure speculation. So to get back to the question of how I would advise a friend, I tell people that the most conservative portfolio you can have in Bitcoin, or in crypto, I guess you'd say, is 100% Bitcoin, 0% altcoins. That's the most conservative position. That's the position I currently hold as well. I'm 100% Bitcoin. I hold nothing else. I just don't see any risk-adjusted return in my mind that outweighs what Bitcoin represents. And most people I tell that to, they start to look at you cross-eyed for all these reasons we've laid out. They're like, what do you mean? Bitcoin's old tech, what about this Ethereum thing? Or I read this cool white paper, or I've done all my homework. I've really studied this project. I know it's going to be a big deal. They really want to fight for the narratives that they've been ingesting. And so I have a second answer. I'm like, okay, if you want to be very aggressive and assume, you have to enter this with the assumption that your alt allocation position could all go to zero. I say the most aggressive you could ever be in crypto is 80% Bitcoin, 20% alts. And I advise against it. I don't think it's a good idea. I don't see where any of these tokens on a risk-adjusted basis outperform Bitcoin whatsoever. I think most of them, the vast majority, will go to zero. But I've found that to be hopefully somewhat of a compromise for those that really want to hold on to the altcoin narratives, because they are very
Do they listen to you
compelling.
though? Do they take your advice?
Mine
don't.
I guess the verdict is still out, right?